All right, guys, welcome back for another video. In today's video, I just want to do an update to the Bitcoin trade I've been, posting and documenting recently. Just provide a little update because we do have some new price behavior. Now, I'm in this position, a pretty large position, over 1,000 Bitcoin position, which is a little bit absurd, but it is what it is. I was lucky enough to get in before the expansion volatility, pretty explosive expansion volatility down here. And, price moved very aggressively off this level up into this area of historical significance over here. So what is the significance of this? Well, it's the FTX, the high put in the market prior to the collapse of the FTX exchange, the fraud of Sam Bankman-Fried and all his cronies. And this is, really does in one way represent capitulation in the market. So if you have the high prior to the capitulation reclaimed, that's a big deal. So we haven't reclaimed it yet, but we did come up and test this level. And you can see here the price moved very, very explosively into the level. And you can see when price hit this level right here, we can move it a little bit closer, get it tight, that the market changed its state of delivery. So whereas we moved up very aggressively into this old historical high, the post FTX collapse high, when we hit that level, let's see if price actually tagged it. Yeah, it just tagged it just barely. You can see these red arrows. These are the sell orders that I had at that level, and these arrows represent those sell orders getting filled. And then again, the market changes state of delivery, so it hits this old historic high and then goes into more of a distributed format, or enters a distribution phase. So we can see that a little bit better on the lower time frame. So on the hourly chart, tags that level, comes down, kind of consolidates for a little bit, enters a low liquidity state, and then makes a run at the highs, right? But once it runs above the highs, just tags those stop loss orders and then slams back into the consolidation. Right, so it's running the stop loss orders that are above these highs, comes back in the consolidation, makes another run at the highs, just above these highs right here, takes the stop loss orders out, comes back, consolidates a little bit, makes another run above the stop loss orders right here, just above these highs, comes back, and then one final push above these highs right here, and then you get a slam back down into the range. Now, if you were following any of my previous videos, you know that I was, looking at this level on the 4-hour chart, and I had a support level marked here. And I had built a hedge here above these highs, actually in this region right here, and that hedge got pulled off when price came down here and slammed back into the range. So again, you can't see that because I'm building the hedge on Bitstamp. We're on Coinbase right now. I don't want to go to the Bitstamp chart just because I've got a lot of different orders on the chart and it's a little bit cluttered. So we'll stick with Coinbase. But anyway, price comes down, tags this level. Again, I don't get the exact low, but I get my hedge pulled off from the highs at the lows. And now I'm looking to rebuild another hedge. So now we actually have a new range in the market. So right here, we can even see it better on a 15-minute chart. And again, let's just pull everything off because I really want to drill down and kind of show how, even though, kind of caught up in the context of like a higher time frame swing, these lower time frames are actionable. And within the context of what's going on here, I think, especially considering, the high time frames are at play, I think if we get a break of this low time frame range, that we see volatility expand again, whether it's expanding to retrace some of the inefficiency in price here. Price moved very inefficiently up here. If price breaks these levels here, it's probably going to move down to retrace equally as inefficiently as it moved up. And then on the flip side, I think, if we break these highs up here, that'll generally be probably have continuation after that. So, we can mark off, we can put stop loss orders right here and here with a high degree of confidence. that, if the range does get broken, that we probably see volatility come in. But within the range, there's a lot of different trades you can take, right? I mean, now you can see here, if we were to draw a Fibonacci retracement over here, now we got our 618 retracement. You can see it ran up into a 618. There's a lot more going on here, but I also want to put the 0.5 region on just to kind of illustrate that, right now price is around the median of the range. So that's really generally not the area where you want to trade a range. You generally want to be trading towards premium or, closer to the invalidation, right? Whether it be this low or this high. Um, you know, some people like to trade the 618, some people don't. I mean, but again, there's more going on here than the 618. You have price come down, hit the base that we talked about, and comes up and fills this inefficiency right into this area right here, kind of filling the gap somewhat. Not perfectly, but almost nearly to this level that's broken. And then we can mark this off again. And then price, comes up and tags it right there, running above these stop losses that would be here. If people were short from here, they get tagged, run into this level. Also running into that Fibonacci, which you saw previously. Then price comes down, bases off these highs right here. You get a little bit of a bounce, and now kind of just consolidating within the midpoint. This is kind of a good illustration of how, any of these price pauses right like this, if you did enter a short position right here, you would want your initial take profit target somewhere like this, right? Because that gives you the opportunity to start managing equity on the account. Whereas, if you had a great entry, but if you didn't take profit off on your short position here, then, price is kind of drifting towards your entry, and it could very quickly go against you without you securing any equity when you had the opportunity to secure equity and start, making the trade more favorable. And that's really what you want to get at. You really want to be able to hit those first take profit targets, because once you hit that, first take profit, the ability for you to pull in further equity out of the trade, accelerates dramatically, because you can get a little bit more dynamic with your stop losses, pull your stop losses tighter after hitting that first take profit. And it just gives you, a favorable risk reward profile for a trade that's being managed dynamically. And it also puts you in a better state of mind when you're able to take out that initial equity from a trade. Puts you closer to what is considered a risk-free state of mind. And now, of course, there's really no such thing as a risk-free trade, but there is such a thing as, being closer towards a risk-free state of mind than a fearful state of mind. I think the difference between the two is that, in the risk-free state of mind, you're more able to perceive risk, ironically. Whereas if you're in a fearful state of mind, your mental faculties may kick in to make it so you can't even perceive the information that would, confirm your fears. And in doing that, that fearful state of mind, ironically, causes the things that people fear to, happen more often to them. That's sort of the rationale behind that. But, I don't want to get too esoteric about that. Just want to talk about these price action concepts. Now, we have this base down here. If price were to collapse further from here, you have this area right here, this base right here, point of release right there that caused a run up in this level. Probably get a reaction off there. We can mark that off. And then you have this base down here, mark it right there. See multiple touches. If this thing starts to break down, then you start looking for the lows in the consolidation to get ran, right? Right here, even possibly right here, you could get a stop loss. But I think, a stop run. But I do think, in the greater context, if these get violated, you're looking at a a little bit of a retracement. Now, if we look at the weekly chart, you can see that pretty clearly here. Everything we're looking at on that low time frame range is not significant. It's just within the context of this one doji candle right there. But this is pretty typical of what you would see um, on a weekly chart, right? I mean, typically you see these type of indecision candles after these big moves, just sort of bulls and bears duking it out. A lot of times, you'll see price kind of close within the range, right? I think it's more likely that the range doesn't break before the weekly close than it does. Of course, how much of a probabilistic difference is there? Probably not significant. Um, but I don't think it would be unusual for price to close here and then to confirm the break of the lower time frame that we just identified, um, which is really the current weekly high and weekly low, for that to get broken sometime next week. Um, Again, of course, we can we can break the highs or the lows tomorrow or even over the weekend, uh, but I think just a way to contextualize what's happening in the market. Now, on the high time frame charts, really this, in the big picture, we're kind of rallying off the previous all time high right here. We've got the first bullish divergence ever confirmed on the weekly RSI, and then you get the RSI making a noticeable move out of this zone right here. Again, doesn't mean that angels are going to fall from the sky and boost Bitcoin up to all time highs. Of course not, but it does show you that I think that if this thing does start running and creating new weekly highs, um, it can run a lot further than people think, especially because of the nature of how impulsively it moved down into this level, leaving these areas of inefficiency behind. If price moves up and especially clears this 25,000 level right here, basically blue skies up until 36,000. That doesn't mean that it moves up in one daily candle. Of course not. But I certainly wouldn't be looking to open short positions if price closes a weekly above this level and then starts getting because things there can get pretty goofy. You know, if price starts to rip parabolically and shorts aren't managing risk properly and you get a supply squeeze scenario, a supply shock in Bitcoin, then you get the Bitcoin that we've all learned to love Bitcoin for and came for it, at least most of us initially. Of course, we haven't seen that side of Bitcoin for very long, which lends people to kind of forget that that's the type of price behavior that actually is characteristic of Bitcoin. And at a certain point, Bitcoin will remind them of that fact, right? Its capacity to move parabolically. It's just a question of when will that supply shock scenario happen? Well, um, you know, interestingly enough, these are actually the conditions in the market where you're most likely to see that supply shock scenario. Now, that kind of flies in the face of people who are trend traders, um, and I really don't want to argue. Well, do you trade counter trend or not? I mean, clearly there is a case to trade counter trend in Bitcoin. Um, But again, I think there is some merit to trading with the trend, especially if you trade momentum strategies. But if you're not trading momentum strategies and price is clearly putting in a reversal formation, um, you might want to identify that the market structure is not the ideal structure for you and your trend based model, and that there might be a little bit of a reversal formation being put in. And reversals can move just as violently, if not more violently, than the trend itself, which is a little bit counterintuitive, but it is something that I think if you go and backtest, you see kind of how that process plays out, especially in Bitcoin. Um, yeah, so this short is not nearly, again, I know I'm sounding very bearish, but I do want to build this short position up. I did take a little bit of profit on the about 50 Bitcoin of profit on this test down here. Again, I didn't get the perfect low, but I had a short from up here. Pulled that 50 short Bitcoin position up. And then when price retraced into this level right here, just above these highs, I actually tagged my order. It was actually had that 618 up and it ran up into the 618. Put this 26 Bitcoin short position on. But you can see, this hedge is not nearly large enough compared to this massive position down here. So I do want to build this short position as it trades further into premium in the range. And then if price starts closing above these highs, particularly on like a 4 hour or a daily, especially obviously a weekly, but any significant time frame like that, then I'll start pulling off the hedge as opposed to adding it on. But we'll see how that plays out. Maybe we get a break of the range tomorrow or over the weekend. Maybe not, but more updates to come for sure. If you guys haven't subscribed to the channel already, please make sure to subscribe. And I'll catch you guys in the next upload.